$780 million is a great exit, but it also pains me because we sold too early. We were neck and neck with another company called AppLovin, who today is worth $200 billion.
Zain Jaffer, co-founder of Vungle, a mobile ad tech company that he grew to more than $400 million in annual revenue and exited to Blackstone for $780 million in less than 10 years. And most recently, he has decided to jump back in the founder seat, launching his new AI startup, Blazel.
Everyone's telling you should go on LinkedIn and you should write on LinkedIn because you might get customers. But it's such a pain to take the time to write. So a lot of people resort to using ChatGPT and Claude, where it just churns out a bunch of AI slop. And we felt that's an interesting problem to address. And so that was the vision behind Blazel. We'll combine humans with AI. We'll be able to help you authentically put your voice out on platforms like LinkedIn.
When it comes to your own GTM strategy, if you can just kind of walk us through, what are some of the plays that you're running at the moment? Hello and welcome back to another episode of the GTM Playbook Podcast. Today's guest is Zain Jaffer, co-founder of Vungle, a mobile ad tech company that he grew to more than $400 million in annual revenue, over 100,000 customers, and exited to Blackstone for $780 million in less than 10 years. Since then, he has started his own family office and venture capital firm, become a real estate mogul and philanthropist, and most recently, he has decided to jump back in the founder seat, launching his new AI startup, Blazel. Blazel blends AI automation with human-led content strategy to help founders and executives build influence and drive pipeline on LinkedIn. In a world where GTM is shifting from brand first to founder first and personal distribution is becoming a real growth lever, this conversation matters, especially for anyone building a GTM strategy in 2026. Zain, thanks so much for being here and welcome to the podcast.
Thank you so much for having me.
Well, before we dive in, I want to firstly congratulate you and your wife on the arrival of your new baby girl. How's it all been?
You know, as you'd expect, sleepless nights, but that's what, being a parent's about.
Yeah, absolutely. And what do you find harder, building a startup or raising a newborn baby?
I think both get exponentially harder as time continues. And now the baby's about 1 month old and, I'm feeling the pain. I'm sure your viewers who are parents can appreciate, waking up a lot more and needing to be held all the time.
Yeah, absolutely. Well, I think, building a startup, really prepares you for those sleepless nights and that hustle and grind. So I'm sure you're well equipped. But let's dive in. So you started your first company at 14. You went on to found Vungle in your early 20s. And within 10 years managed to scale that company and exit for close to $1 billion. And, it sounds like every founder's dream. However, I'm sure, it wasn't all smooth sailing in a boulevard of green lights for you. So if you can start by just walking us through, what that journey was like from starting so young to the key inflection points throughout that journey and some of your early failures and critical lessons that you had along the way.
So my parents were immigrants from Africa. And I grew up in the UK, as you can probably tell with my British accent. Grew up in an area that was rough, lots of bullying, and I managed to stay out of trouble by getting obsessed with computers, and my voice broke quite early on. 13, 14, I started to hit puberty, and I had a deeper voice. And so that was my asset. So I was able to pick up the yellow pages, call up companies and convince them they need a website. Do everything I can not to meet them face to face. Try to do as much as I can via phone or Skype. And I started convincing people to spend £500, back then almost $1,000, on paying me to get a website built. And then I realized I can hire some people in India for, at that time, it was $300 a month. So I figured all I need to do is to sell one website to someone locally. It will take my designer in India 2 days to do it. And now I have all this excess capacity that I can utilize. And so I started building my own websites, and I also started selling websites to other people. So that was my first entrepreneurial stint. I did a lot of things back in those days, especially building content websites. And I came across the idea that I have all these websites, but I'm not making much money by slapping ads on them. And that planted the seed for me around, okay, content's free, but it's hard to monetize. And fast forward, startup after startup and failure after failure. When I started Vungle, the idea was mobile apps are taking off. People right now are paying a couple of dollars to download an app. Apps should be free. So if we can figure out how to put a video ad inside of these games, they'll be free to play. And so we pioneered that, and that company grew explosively. In our first year, we did $850,000 ARR. Second year, 15 million. Third year, 56 million. Fourth year, 65 million. Fifth year, 150 million, and then 300 million. And then, it was very profitable by that point. Now, you might look and say that's amazing. $780 million is a great exit. But it also pains me because we sold too early. We were neck and neck with another company called AppLovin, who today is worth $200 billion. So the difference between 780 million and 2 billion is 200x plus, and could have been 200x bigger had we stayed on the path. So there's also that other side of it.
Yeah, absolutely. And like for someone who might be along that journey at the moment and wanting to draw inspiration from what you learned, what would you say were some of those biggest lessons that you've now taken to apply with your new startup, Blazel?
So at Vungle, it was a whole new category merging, and so we were doing things no one had ever built before. And at Blazel, I feel the same too, because we're using AI and AI agents, and every damn month there's something brand new coming out. And when you're on the cutting edge, you're fixing problems faster than YouTubers can come up with tutorials to teach it. And they're at a very shallow level, obviously, you're going really deep. So I've always enjoyed being on the cutting edge. I'll give you a specific example. At Vungle, it was crazy at the time to think about putting video ads on smartphones and games. Back then, 2011, the App Store was churning out farting apps, and apps where you'd press a button and the cat would go meow. That's what mobile apps look like, gimmicky. And then for me to come and say we're going to put video ads inside of these apps made no sense to most people. You've also got to remember at the time, connectivity was quite limited. Forget what it was, but 2G, 3G, whatever it was, video ads would crash. They would never load. So we figured out, and this is just one example of many, right? We figured out, if the game starts and you immediately start downloading the video in the background and you pre-cache it, when the video ad is ready to play, and only when it's fully downloaded, it's a seamless experience. The video loads instantly and it doesn't buffer, it doesn't crash. So that was one of the innovations we came up with to enable our success, and also we betted that connectivity would improve and we wouldn't have to be so aggressive with pre-caching, we could start streaming video ads. And today is the same challenge with AI and AI agents and how you orchestrate things. So being curious, being on the cutting edge, and being very quick and nimble. That ability to be fast can get you out of danger when you're about to crash into a wall. It can help you pivot to a faster opportunity. And so I credit our success to those two traits, and that's something that I'm definitely taking with me. And then hopefully I come with some experience from the many mistakes I made at Vungle and applying them this time round, much later. We sold in 2019 and now we're here in 2026. So that's 7 years later, but still have it in me, like Mike Tyson going back to the ring, but still has that energy and DNA.
Ready to build that multi-billion-dollar company this time around.
Hopefully.
Yeah. Awesome. Well, this kind of ties into my next question. After a $780 million exit, you would assume most people would, step back and enjoy a cushy life, probably drinking cocktails on some private island somewhere. And I remember chatting to you, just after you had your exit and you were an investor in one of my companies. And, every time I spoke to you, often some exotic island on a family trip, whether it was in Italy or, some other place. I guess what made you trade in, that, and what drew you back to jumping in the hot seat again as a startup founder?
As I was introduced to the startup grind from such a young age, it just became wired in my DNA. And I made a promise not to jump back into a startup. Not just a promise, I was well advised by other people who have gone down this path. Don't just jump straight into it, take time off. So I took time off and I was bored out of my mind. Enough time away from being in the founder seat, working with you on the other side as a VC, seeing founders execute and grow their company, and I'm on the other side as an investor, really, really like jump started that drive to jump back in beyond just being a capital allocator and an advisor. So yeah, it's just who I am, right? It's just the love for it, and I think founders often become founders because they're unemployable. I think I'm unemployable for sure, but also it's just in your DNA. You can't help but cause trouble wherever you go, and finally you found a way to express yourself through having control and building things.
So a bit like being a retired football player, you're now a coach, and then you just were itching to get back on the field and just play with the boys again.
Yeah, and the sports analogy aside, at least with sports, you have a shelf life. Whereas I truly do think with the ability to start a company, you can do it at any age. Age has its advantages. Like when you're young, you have more energy and drive, and you don't have obligations. You don't have a lifestyle to sustain or a family to feed, so you can jump all in. But on the other side of it, age gives you experience, gives you wisdom, and also makes you a hell of a lot more serious and intentional with how you spend your time. But you don't have the shelf life you have as an athlete, where you have lifelong injuries and a lot of discrimination too. You're not going to really be able to make it to the NFL or the NBA if you start to age too much, right? Your time is over for sure.
Yeah, absolutely. Now your new startup, Blazel, is super exciting. And for those who are yet to come across the company, can you explain what is Blazel, who is it for, and what problems are you solving for founders and execs?
Yeah, let's start with the problem. Everyone's telling you should go on LinkedIn and you should write on LinkedIn. Why? Well, there's 1 billion plus people. But really, why? Well, because you might get customers, especially if you're in the B2B space. But it's such a pain to take the time to write. And so a lot of people resort to using frontier LLMs like ChatGPT and Claude, where it just churns out a bunch of AI slop. And we felt that's an interesting problem to address, and it's currently being addressed by a bunch of agencies. And we figured there's this whole new approach where if you bring AI to agencies and you become an AI native agency, or there's another term for this, services as software, then perhaps with AI you can operate at higher margins and you can build an agency like the world has never seen before. And so that was the vision behind Blazel. We'll combine humans with AI, and we'll be able to help you authentically put your voice out on platforms like LinkedIn. And so that's what we've been focused on so far, and it's going really well.
Awesome. And, you could have simply invested in another company in this space. What made you decide to build Blazel yourself? And, what was that gap that was missing within the market that the current wave of AI and content platforms was not addressing?
So I've always come from a marketing background, and I started to realize we're living in a world now where corporate and traditional marketing is so old school. We're living in a world now where the value of an individual brand can be more powerful than a corporate brand. There are certain people on this planet, if they tweet or if they put something out in public, stock markets can drop, wars can start. Individual influence is so important, and there's no marketing stack to help the individual build their personal brand, to go out and master these different social platforms that are very difficult, by the way, to master. And so we just felt like the marketing stack's about to be reorganized around the individual rather than the traditional corporate brand. And if we build a ground-up stack from the beginning focused on that, that could become really interesting. And so for us, LinkedIn is merely a stepping stone to a bigger vision, but it's a good wedge for us, and it's exciting. It's what I felt like I was born to do, and most of my startups have been in the marketing tech space.
Now, I guess as both a founder and exec, in the process of trying to build my own personal brand, I know exactly how much of a pain in the ass it is to, post and go through that process of, building a personal brand online. And I'm keen to understand with Blazel, if you can walk us through what does that end-to-end experience for a new client at Blazel look like, from onboarding to content going live, what happens and how much of that is AI-driven versus human-driven at the moment?
Yeah, so we're moving quickly, so I don't even know by the time this is published if our processes will change. I feel like I'm changing things every day, but currently the iteration we feel is working is before you even join, we have scraped so much data on you. We've scraped the web, we've scraped all your LinkedIn content, and we've also spoken to you perhaps on a sales call where we've asked a lot of discovery questions. Like, what are your goals? Who is your ICP? So, day zero, the process starts with onboarding, and we can get straight to the meat of this. We can start showing you, like in a quiz style, here are other authors on LinkedIn, here's how people in your industry publish. Is this what you want to sound like? And we call this internally a voice crafting process, where we help figure out your voice if you don't have one yet. Then we interview you. We catch up on monthly calls. We might change that and make it more frequent, but we interview you based on what your goals are, and we'll ask you questions, sort of like a podcast. And you'll say things, and some of those things you say can be turned into content for LinkedIn. And so we then go into your account and we publish this content for you. And we also try to make sure it's relevant to your goals. So if you're trying to attract C-suite executives at Fortune 500 companies, we'll help you create a content calendar and content that will target those, let's say, C-suite executives like CTOs at, mid-market or Fortune 500 companies. So that's the primary way we work. And the idea is to grow your followers, to get more reactions, and ultimately to get more sales. Because LinkedIn can be an amazing channel to grow your pipeline.
Yeah, absolutely. And I see a lot of founders and executives, they're often, sharing their journey, building their startup or building their company and things they're seeing on the ground. How does your platform basically keep up to date with those real authentic stories that are happening within that founder or that executive's life?
So we're working on things like integrating into the note-taker apps, catching up as often as we can. If they have an idea, they could just send it to us on Slack and we'll turn it into content already. So it takes that cognitive load off. It's a lot of mental energy. Once you jump on this hamster wheel of publishing content, LinkedIn rewards people who publish consistently. And if you don't publish consistently, you won't get anywhere. And so the work required to go from idea to polished post is significant. And we're a partner that can take that on for you because we understand the platform and know how to write really well and make sure it doesn't sound like AI slop.
Yeah, gotcha. And what about when it comes to visual elements to content? You can either just post copy or you can post copy with an image or video. How do you guys integrate that into your content?
We've started to push video a lot, so we'll jump on Riverside, which is a platform like Zoom, and we might ask you a question and you might go on this monologue and you're on fire, and that video clip, so genuine, can be used to push content out. But we're living in a world now where it's about multimodal content. So to do well on LinkedIn, you probably want a mixture of text, images, videos, sometimes every now and then an upload such as a document, or even publishing an article on LinkedIn posts, or even setting up a poll. So we help figure out what the right content mix is. But in terms of creating images, I find that the worst thing you can do is just, currently at least, go into these models and just prompting an image. It looks so AI generated. It's a lot better to have authentic photos of you every day. You maybe in your office, maybe at an event, or maybe a screenshot of your product. Those do a lot better, and images do have slightly better engagement rates than text.
Yeah, I agree. And so at the moment, is the process with your customers where you would just ask them just to continue just to feed you guys with photos, authentic
Yeah,
photos around
share
your
the
office,
Google Drive with us and your photos, and we're able to then not
stitch it
repurpose,
together?
but stitch it together
Yeah.
exactly.
Yeah, fantastic. And this kind of ties into my question just around, many founders lose their authentic voice when they outsource content and end up sounding like everyone else. How do you guys keep a client's content, sounding like them and not just being a generic AI persona?
That's why you need a human in the loop. That's why you have to jump on phone calls or rather recorded video interviews, and also being able to share voice memos back and forth. Because the more you capture their thoughts, the more original content you have. Then we also use something called reinforcement learning with human feedback. So when you see your content for the first time and you go in and you make edits, those edits are used to train our AI model so that next time round we can be smarter with how we produce the content and we get closer to the bullseye for how you sound.
Yeah, awesome. And you're effectively building what I like to call like influence as a service at the moment. And in your view, which part of influence can be systemized and automated, and which parts do you think will always require human judgment and taste?
It depends on what your goals are. I think you will need a human for quite a while. I don't think AI is there yet. I think where a human can help, even if AI gets better at changing the way the copy sounds, is a human can help with strategy, help mix up the themes that you're going to write about or that we'll write about for you. And as you make changes to your business, we can come proactively to you and advise and guide, especially as the algorithms keep changing. But also, we monitor breaking news in the industry, and there are many occasions where, hey, this is a great opportunity for you to be the first in the industry, to break the news, give your perspective, and generally be a thought leader that people look to as someone in the industry who is very knowledgeable. And so I think just having someone there who gets it, because it's very hard for you to do it yourself. It also is very expensive for you to hire a full-time copywriter or content writer. And most marketing leaders really struggle with individual branding. They're really built for corporate and traditional branding. If you zoom out higher level and you look at the idea that I came up with initially, which is the marketing stack's about to be reorganized around the individual, what you see as an example of that is a role is emerging in large companies called the Chief Communications Officer, distinctively different than the CMO. This role has more frequently than not reporting to the CEO and is in place because boards of directors have wanted to make sure that the general ecosystem of stakeholders are managed well. And CMOs have really struggled with helping the executive build their voice, their persona, their brand, engaging with talent, engaging with investors, engaging with potential customers. It's generally, marketing's been about traditional marketing. And I read about this and I saw the trends emerging at the Fortune 500 level. Some of these Fortune 500 companies have hundreds of employees just focused on building up the persona of executives. What do? They write their social content. They craft perspectives, long-form blog posts. They get the executives in podcasts and speaking engagements. And I felt that with AI, there's an opportunity to take that and package it up and make it fit the broader market. And not just available at a crazy price to the elite executives, but package it up and make it broadly available to the consumer market.
Yeah, absolutely. And you mentioned something before, which I think is really profound, is around for posts to be successful and content to be successful, there's a timely element to that as well, in terms of, if there's relevant news or things that are going viral at the moment or things that people are talking about at the moment, the algorithm tends to prioritize and push those pieces of content out to the wider audience more. And I think as a founder or an executive where your focus is on your business, not necessarily around, waking up in the morning thinking about what content you want to post on your social media, that's where being able to, outsource that headspace to a platform like yours, who's constantly, that's your focus. That's what your business does day in, day out. You're looking at ways to make content more viral, make content more appealing, help build personal brand. It's like outsourcing, other areas that aren't core to your business in other areas as well.
Right, and I it's interesting. I see very successful companies. They encounter customers who have such a pain point that the customers themselves are trying to build it internally and keep failing. So I see lots of people trying to integrate OpenClaw and trying to build their own AI agents, and they can only go so far. Whereas a venture-backed company that just obsesses about this one problem can really do it a lot better than you can as a sidekick.
Yeah, and I've been doing a lot of work at the moment with OpenClaw and Claude Code, etc. And there is something, and I'm a massive fan of the technology, and I believe there are some applications for it, especially when they're like point solutions for various challenges within your business, especially where what you're wanting to create doesn't quite exist how you want in the market. But I feel like things that are that have an extra layer of complexity. And I see, posts where it's like, HubSpot's dead or, Salesforce is going to be replaced. And I'm like, do you know what goes into building a CRM and what goes into maintaining that from a debugging perspective, with integrations and, every other tool out there has to integrate into either Salesforce or HubSpot, but, they probably don't natively integrate into your custom built CRM. And so therefore, every time you want to integrate into something else, you're going to have to build, a new connector, and that takes time and effort and the rest of it. So, yeah.
The global stock markets have, I think, got it wrong with traditional tech companies. The assumption is that these tech companies are going to be wiped out with AI and they'll be replaced. Hence, some of these names you've mentioned have seen significant drops in their stock price, despite some of these names crushing earnings, growing revenue. To me, it feels like these companies are in such an amazing place to implement AI and win in two ways: become more profitable by cutting costs, and number two, by buying the AI technologies, implementing AI into their core offering. And if they fail, they can buy an incumbent anyway, given some of the market caps they have. So I feel like they are the ones who stand to gain the most with their network effects they have, the scale that they have. And I wouldn't write them off. I think there's probably the best returns imaginable right now. Or I mean, it's a risky bet in some ways. These companies either go to zero or they grow exponentially larger, right? But I think existing incumbents are in a really strong position to implement AI and win. And trust me, the execs, you think they're just sitting on their laurels relaxing? They're panicking right now. They're all being questioned by the market. What are you doing with AI? What do you think they're doing? They're not just sitting there trying to maintain technical debt. They know their job is on the line. They know their shareholder equity is on the line. You bet these guys are going to implement AI very quickly. And I don't mean like our engineers use Claude Code, and so we don't need as many engineers. Or we use these AI agents to help with the sales process. I mean, we're going to implement AI into the very damn workflows that our customers use, and we have existing customer relationships, and we're going to multiply the revenue we can make because AI allows you to do that.
Yeah, absolutely. And has there been anything that surprised you from your early customers and the data that you've been able to capture so far? Like, have you seen anything that's counterintuitive about what actually drives reach or engagement or inbound pipeline?
Yeah, I think you need a diversity of content. You don't want to be self-promotional too much. You do have to mention your company every now and then, but you've got to do it in a way that isn't just in your face, like you're just trying to promote your company. People don't want to read that. People would rather hear about you building in public. People would rather hear the stories of the origin, like how you started, how you got your first few customers. Those are things that people want to read, and organically as a byproduct, they'll pay attention to you. They'll perhaps Google you. They'll see your LinkedIn profile. If they're on LinkedIn already, they'll click and they'll see, wow, this guy's really publishing cool stuff. I'll keep following him or her. And after a while, I have a need, and that person came to mind, and I feel like I know them already. So they contact you, and if you're a B2B SaaS company, or any company really, you might suddenly have a $300,000, $1 million, or $50,000, whatever it is, deal, that just walked warm on the table for you to take because
Yeah.
you invested in your social media presence, which is a
Yeah.
must-have today in the B2B space.
So it's very similar to, your normal B2B marketing. If you're just out there putting bottom of funnel ads, book a demo and not doing that top of funnel like nurture, it's almost the same with your personal brand, not just using your personal profile as a way just to distribute ad content, but actually trying to, capture people top of funnel, get them engaged, work them their way through. So when they are ready to buy, they're familiar with your brand and product.
Exactly, and it's become a must-have or must-do activity.
Yeah, especially how noisy the other channels are now. Because of AI, people can now, blast email out, all their TAM. You can post, content and everything else so freely, and have AI SDRs calling prospects as well, and they get quite flooded now that people switch off to it. Whereas that authentic founder-led, executive-led content has still got a place, which is great.
That's right.
All right.
I think LinkedIn itself is falling victim to people just becoming lazy and slapping AI slop everywhere. So even more so, the algorithms there, I think, are now detecting that. And when there's authentic human-led content, that does really well. You stand out even more in this sea of infinite content that exists.
Yeah, absolutely. Now, I'd love to switch to starting to unpack your own go-to-market and growth strategies, both within Vungle and also now within your new startup. So when you look back at your Vungle early years, what were the specific GTM decisions that actually moved the needle? Like, were there plays that unlocked exponential growth that you can recall that got you to where you did with that Vungle journey?
Vungle's revenue stream was very transactional based. It wasn't recurring. So we'd make money when people view ads. And we also were dealing with a very leaky bucket with churn because we faced a lot of customer churn because an app can only be so hot for so long. And so we'd go after the top 10 games or the top 100 games in the App Store. The thing is, a game comes out of nowhere as number one. And at that point, they're against ads and they think this is going to last forever. Suddenly they start to see the users drop and the writings on the wall, and they urgently contact us, and they respond to our outbound, and they are like, okay, let's integrate your ads. Wow, they're making a ton of money, but too late, like your users are on the decline. So we faced a lot of that at Vungle. It was a leaky bucket, I'd say. But we grew so fast because people were coming online so quickly. When I say online, I mean smartphone adoption at that time was bananas. Everyone was buying smartphones, and the world was getting connected to the app ecosystem. And then people were getting more comfortable with spending money on smartphones too through in-app purchases. And so despite there was a systemic churn problem because you can only be a hot app for so long, there was also a tailwind so strong that it made up for the leaky bucket that we had. You lose $1 of revenue, but you bring in 10 more. That's great, right?
Yeah, absolutely. And did you find a way to plug that hole as time went on, or was that basically how it was all the way through to exit?
No, it's a systemic risk when you're in the media and publishing business. It's about eyeballs, it's about traffic, and you might be a hot publisher one day, but next week or next month, you might not be a hot publisher anymore, and you might see a decline in your daily active users. So what we focused on was building strong advertiser relationships. We knew we could go to any app in the world and would get you premium advertisers to advertise. And those advertisers had unlimited budgets, literally. They had unlimited budgets because they wouldn't pay per view, they'd pay per install, pay per download. So we were one of the first companies to pioneer the idea that these other advertisers are apps themselves, like Uber, for example. Uber would advertise in a gaming app and then pay per install. They're happy to pay per install all day long. And if someone watched a video out of Uber, chances are they're going to understand what Uber does. And so they're a very high value user. So it became what we call user acquisition, like a user acquisition platform. We had two sides of our marketplace. Every marketplace has two sides, the supply and demand. For us, the supply were all these games that were top 100 that needed ads to make money. And then on the other side of it, the demand side, you had a world of advertisers who were trying to reach people. And they will bid and they will pay crazy amounts. We used to get paid $5, $10 every time someone saw a video ad and downloaded an app. I remember just going for a dinner, looking at the Vungle dashboard, right? And by the end of the dinner, we've made $1,000 more. And it's just like, wow, this money's coming in. I actually forget $1,000 more. We're making $1 million a day, right? So it blows your mind.
Like a slot machine hitting the jackpot, just ding, 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 ding.
Yeah, it really was, and we're printing so much money I couldn't understand. I've built a business here that makes money whilst I sleep, and I'm getting paid handsomely. And every time around the world, I'd go on long distance flights because we had 8 offices around the world, and I'd walk on the plane, and I'd see people playing games where our ads are showing, and I'm like, man, I'm making money every damn second right now, and this is happening at a crazy scale. $1 million a day, that's a lot of revenue, right? And each time someone watches an ad and downloads the app, boom, cha-ching, cha-ching. So it felt like a slot machine for sure. It was a crazy.
And I think a lot of founders, think they've got product market fit, when they're starting to make sales and get some traction. But I think what truly determines product market fit is, that experience you have where customers are almost like pulling the product out of your hand, and it's just like
that's right.
taking off.
You don't. Okay, yeah. If you're questioning, do I have product market fit or not? You don't. You will know when you have product market fit. When customers are harassing. Oh my gosh,
how is this selling so fast? Yeah.
Well, not just that. They're strangling you to hurry up, get the product out. I need this feature. I need that feature. People are pulling things out of you, and I felt like you're grabbing not a tiger, like a dragon by the tail. Like, it was brutal. Like, literally imagine the metaphor of a flying dragon and you're holding it and you're getting whiplash. You're getting slapped around as you try to hold onto the tail, smashed up and down the walls and in the water and in the clouds, right? We were just struggling to hold on. It's like, this beast is so big. The demand is so freaking clear. We just have to urgently build this. And on the horizon, there's Facebook and Google coming in to compete with us. And there's all these other headwinds, but we're great. Like, we just have to quickly build this as quickly as we can. The market timing opportunity was so ripe for what we were doing. So yeah, product market fit for sure. Other startups have what I call message market fit. So I believe you have a sales proposition that works so well, customers sign up, or you have a GTM strategy that's so great, people convert. But then they churn, the product doesn't work well. So message market fit is a prerequisite to product market fit. And product market fit is when not only do you have the message, but you have the product to deliver against the expectations.
And what's your view on the difference between message market fit and product market fit? Do you believe that if someone just has message market fit, that they should just double down on their go-to-market strategy and really start to scale that? Or should they continue to prioritize working on adjusting the product to make sure or get themselves into that position where customers are pulling it out of their hand?
There's two schools of thought. I'm more of the mindset that just keep selling and keep going and you'll figure it out along the way. But the other school of thought is stop, make sure you nail the product, get a small cohort of users who are very happy with your product, show that retention rates are great, usage rates are great, and that your product is amazing. And then if the product is amazing, you will scale with the market. That's one approach. But history is littered with the corpses of amazing technology products that lacked distribution, lacked GTM sales. So I subscribe more to the mentality, if the demand is there, sell into the demand, keep learning, because every churn you face, every customer you lose, you're getting valuable feedback that you can then address and work on and make the next customer slightly happier until eventually you figure it out. So I don't like the idea of building in a, building with your head buried under the sand thinking you're Steve Jobs. Very few founders can pull that off. Like, I think I know what the market wants. Clearly the market fit is there. We just have to build a great product. I really truly believe, like, stop trying to delude yourself. go out, sell before you build, validate that this is real, and then just nail one domino at a time.
Yeah, almost dying to the pursuit of perfection versus
Yeah.
getting a product good enough, getting out there, and then learning from the customers.
Now look, I'm a very biased voice because this is my opinion. I believe in it, but you bet there's so many counter arguments to this strategy, and you should really nail the product and get it right. And I can definitely see that. I think it depends what type of business you're dealing with, right? If you're in the health tech and biomed industry, sure as hell. Or regulated industries like fintech or legal or even cybersecurity, right?
Can't afford to get it wrong, right?
I don't think you can get it. You have to put a critical mass of features and a polished product. But other industries, which is why I love marketing tech, you can just get scrappy and sell it and then figure out how to sustain the demand.
Yeah, absolutely. Now, you built Vungle in a world where mobile ads were exploding, data was plentiful, and paid acquisition was a dominant growth lever. And now you're building Blazel in a completely different market, completely different climate. What have you noticed specifically that's changed the most about GTM since the Vungle days and now?
Well, we are a GTM channel, but Vungle was a GTM channel too for games, right? But I found it's really hard for B2B leaders to, or founders to, or even execs to get sales, to promote their brand in a sea of competition. AI is causing so much competition, Me Too's are popping up everywhere, that people want to buy from humans. And so obviously we try to attack that problem ourselves and become a GTM channel by starting with LinkedIn. So we understand the problem, and that's why we're building the solution for the problem.
Yeah, okay. And when it comes to your own GTM strategy, if you can just kind of walk us through, what are some of the plays that you're running at the moment, or channels that you're running at the moment that you're finding most effective?
We drink our own champagne. We don't spend any money on paid ads. We just publish content on LinkedIn, and the volume of deals and customers keep coming in. You've got to look at what our ICP is. ICP here means ideal customer profile or persona. And for us, we break it into three categories. Number one, founders and execs of tech companies. Number two, service providers like recruiters, fractional sales leaders. And number three, VC/private equity. LinkedIn is full of those three categories. So when we look at our available market opportunity, it's literally measured in the hundreds of billions of dollars in revenue. And let me break that up for you. Let's just take mid-market companies. There's 300,000 mid-market companies in America. 200,000 of those, 2/3, are B2B companies. At our ACV, where we charge $3,000 a month for our current offering, right? That's a $36,000 ACV. You take $36,000 ACV and you times it by 200,000. That is a gigantic number in terms of revenue. And that's just mid-market. And trust me, like if you're just dealing with mid-market, we ain't selling one seat, buddy. It's not just the CEO that needs a seat. The entire exec team needs a seat. So you might now be looking at a $150,000 deal selling to 200,000 mid-market executives, right? You look at the number of financial advisors out there, it's tens of billions in revenue that we could capture. So when we looked at our GTM, it was shocking to me how much of a global problem this is. The benefit of what we do, sort of, if you peer into how we work, right? Service is a software, which is this new emerging category. Another way to think about it is AI native agencies. With the right GTM strategy, you can make B2B revenues from a B2C market. When your market is measured in the tens of millions of executives or hundreds of millions of people, but you're able to extract B2B/enterprise revenues, it becomes very interesting. And you can only do that by leveraging AI in this, what I call service as a software opportunity.
Yeah, interesting. So you guys, your only channel at the moment is all LinkedIn. You've gone 100% on LinkedIn.
LinkedIn, we'll do webinars to teach people how LinkedIn works. We'll go to exec teams and we'll go to portfolios of VCs and or the portfolio companies of VCs, and we'll do like a learning session on how LinkedIn works. We built our own AI SDR that we're trialing out, which is doing okay, but there's a lot of improvements to make there. So our own built AI SDR. But yeah, we haven't done any of the traditional stuff like paid media or going to events. Actually, we have two account executives and they go to events and see tremendous success. But personally, like they go as attendees, just because they like going to events. It feels like you can talk to any single person, and this is a need that really strikes to the core. Like, I know someone that needs this, or I really need this.
Yeah, interesting. And you touched on before that you're building out your own AI SDRs. Is there any other AI tech that you're leveraging outside of your own that you're introducing as part of operations or go-to-market at the moment?
I mean, we're building on all the AI technology stacks out there, right? I think the model here was build a company where your engineering team is OpenAI and Claude or Anthropic. They are building so much technology that all we have to do now is leverage their improvements. Every time they release a newer model, it's like we just got a free product upgrade. So building on the shoulders of these giants, and we're always experimenting with new AI tools and platforms and technologies. We actually have a very deep AI bench. We have engineers that have PhDs in AI and come from the world's top. We're a Silicon Valley based startup, right? So we've invested a lot and have amazing engineering talent.
Yeah, fantastic. And your previous venture, you scaled to 400 million in revenue. What lessons can you draw upon from a go-to-market strategy from that? Some of those costly mistakes that you're wanting to make sure you do not make again this time around.
When it comes to GTM, one mistake we made at Vungle that was absolutely a critical mistake. It's the reason why we sold for $780 million and we didn't sell for 10 billion or 100 billion, right? We actually had a lot of investor pressure because our investors were concerned about the leaky bucket problem and the sustainability of building a business on the back of games, hits-driven business. And so the focus was always expand out of gaming. Go chase non-gaming publishers and go chase non-gaming advertisers. So the core of our business was literally a bunch of gaming apps advertising in more gaming apps. It was like this really strong circle, right? It's an endemic ecosystem. And to the board, the focus was, don't bring in another damn dollar of gaming revenues, please. Expand. Well, if I've built this ecosystem of games advertising in games, for me to become non-gaming, I have to now go after non-gaming apps and non-gaming advertisers. That was a tremendous distraction, right? The floodgates just didn't open the way we hoped they would. We thought that Coca-Cola is going to be advertising in some to-do list app, right? You might think, well, hold on, if you have so many games, why doesn't Coca-Cola advertise in the games? Buddy, there are some brands that don't want to be shown alongside, like, a character being slaughtered with a knife or a gun, right? So brand safety was a big concern for some of the big advertisers out there. So it only became about 10% or 15% of our revenues. Still, tens of millions of dollars, right? But it never became like hundreds of millions of dollars as we thought. Like TV advertising was coming over to smartphones, and the investors understood that proposition. But that was sort of a switch and bait from us. Like, that's what we presented as the vision. The reality was it's a bunch of games advertising in games. So what happened? We were constantly under pressure to show and to put resources against this expansion. So whilst we were busy doing this, this other company emerged called AppLovin, who was just fully focused on games advertising in games. So every feature, let's just pretend we both have the same resources. I have 10 units of energy to spend on my product. If I'm spending 3 on games and 7 on brands, right? And they're spending all 10 on games, they're moving 3 times faster than we are. They were out executing us in our core business. And we, on the other hand, were spending so much of our energy just to grow revenue 20%. they were spending all their energy to grow, 1,000% year over year. Literally, like that's the scale they were growing at. So they overtook us just before we sold. Became clear they were the leader, and they also didn't have investor board pressures the way we had. The founder, Adam, who's a friend, I know him. He, was more product focused, less sales focused, and being a repeat founder, he had was able to raise money on better terms, where he had, you could say, more shareholder control, more board control, and those things are critical when you're running a company.
Yeah, super interesting. So if you had your time again, would you say you wouldn't have taken on that advice and instead doubled down on your
Yes.
core market, look at ways to make them more stickier, drive
Yes.
more revenue
Yes.
from them versus going
I mean,
hard?
look, you'd have to be an idiot not to look at all opportunities. So I definitely bought the idea that video ads are going to come to smartphones and gaming is just the start. But I started to see data out there that was showing me this isn't working. So I'd go to the board and be like, this isn't working. Try harder. Try something else. I'm like, look, our freaking core business tripled. Like, over the last year. We've made no damn progress with this brand non-gaming thing, right? And the advice was always like, forget the core business. We'd rather revenues flat. Like, you've got to crack this. We need safety. We need stability. And that's what happens when you get, Wall Street style investors involved in your company at the board level, and they don't get it, right? So yeah, and frankly, the argument may have been the revenue multiple's lower, and it's going to be harder for you to raise capital if you want to go public. So you have to show revenue diversification and this pitch that's easy to understand. What's the pitch? People are watching videos on smartphones. All those TV ad dollars are going to go to smartphones. It was such an easy pitch to understand, but it was so damn hard to execute on. And it was just, we already had something that worked. And it's a tragic shame. So I think I knew in my heart after trying and experimenting, it wasn't working. But I had to put a lot of energy into expansion, and I wouldn't have, going back, if I had the control, I know I would have just focused on the core business more because it was working.
Yeah, interesting. Well, talking about investors, we'll switch gears for a moment and start talking about your journey to switching to the dark side as a VC and investor yourself. Because besides being a tech founder, you've gone and established a family office, Zain Ventures, and a prop tech VC firm, Bluefield Capital, as well. So you've generally, I guess, sat on both sides of the table, being both a founder and an investor as well. So I want to pull on that, I guess, dual perspective for a moment. So when you were raising for Vungle, what did you, I guess, not understand about investors that only became obvious once you were sitting on the other side of the table at Bluefield Capital?
You were negotiating with sharks, and there I was as some immigrant to the US on a visitor visa, desperate to raise funding, had no idea how terms work, and we got such a bad term sheet to start with that we signed. Those terms are wiped out later, but they were horrendous terms, predatory, honestly. So unfounder friendly. Whereas you're dealing with sharks. Sharks, VCs are negotiating with founders every day, and they get more reps in and they understand the term sheet inside out. But you as a founder, you might focus on the headline terms like valuation, right? VCs understand there's all these other levers that can get them the downside protection and more upside if they are, smart enough. So that was one thing that I learned on the dark side. Like, wow, I had no idea like how this game works and how naive and gullible I was as a founder, a first-time founder, I should say, versus becoming a VC and investing. I've invested in over 50 startups, but our VC fund specifically invested in 22 startups, right? And we've done over 50 checks into these startups, and each of those has been like a unique deal. So you build those reps. You don't want to step into the ring and not have that experience. Like, you will be destroyed so quickly, and that matters because you're a founder signing up to partner with your investors, And back then, there wasn't such a thing as YC Safe. I think the YC Safe tries to solve some of this, but it doesn't exist at the Series A, Series B, Series C. You know, those are much more unique terms, right? But the YC Safe helps first-time founders, and it was created to solve this problem. But back then, there wasn't really a YC Safe. It was like you would negotiate convertible notes, and investors had their own convertible notes. But the problem still exists today, like I said. So we're there, and we're signing up for something that would be the rest of our career as founders, and we're stuck by these terms. So I've alluded to the terms. Like I think the first term sheet had a 3x liquidation preference, had like a stupid 8% interest rate or something like that. So every month that passes, we're giving up more and more equity if we don't raise capital. You know, lots of lots of terms that are so not standard. So that was one thing that I walked out with my next company. I'm going to absolutely have full control, and not just as a first time as a founder of someone a company, but also as a VC. It was awesome. Like I was able to dictate the term sheet myself. But then again, at Vungle, we were so successful. We wrote our own term sheet for the Series B. We literally said to investors, like, there are two things you fill in: valuation and money you're investing. All the other terms are terms that like we need everyone to agree on up front.
Yeah, it's a good approach. And would you say, like, for someone who's raising capital now, say it's for the first time, what advice would you give to them for them to avoid it? Is it a matter of just speaking to a lawyer, or there's key things they should look out for and red flags in that term sheet?
Just try to YC Safe. ChatGPT can be your friend, but I think it's fair enough. Like I get advice from ChatGPT myself all the time, so that's what's worked for me. It's up to you if you want to consult that. Obviously, I should say go consult a lawyer, but who can afford the $2,000 an hour that Silicon Valley attorneys charge? And those attorneys are damn good, so they charge a lot. They know how this works, but we need to balance also ownership versus what you need for the business to grow. And that's a really tricky trade-off. You might start the game out with 3 co-founders. In that case, you have less pie available for yourself. Then when you factor in employee options and you figure out dilution from all these investment rounds, you have to really just decide, like, is this a trade-off you can make? Do you need to raise less, which means you might move slower, right? Or do you in my case, like with Blazel, I was a solo founder this time, so I could be more generous with equity, and I was able to raise them really good terms, but those are really tough trade-offs to make.
Yeah, absolutely. And I think it's great advice, because I've seen some horror stories where founders have built a multi-billion-dollar business, and at the point of exit, because there's been some down rounds, they basically walk away with nothing after building what you would consider a successful business. Over a decade, in most cases, of hard work, sacrifice, and then to walk away from that, yes, with the experience and connections and everything else you get from growing a startup, but without being able to pull anything off the table in that process. It's quite sad to see in some instances. Yeah, absolutely. And someone who's, I guess, evaluated hundreds of pitches, what is the first red flags that tell you a founder's either not ready for institutional capital, even if their product looks amazing?
That obviously solves one of the major risks. I feel like in today's day and age, being a more technical founder is important. Or if you're non-technical, you can easily learn to vibe code and make a lot of progress. I think founders who are not really in tune with vibe coding and seeing where technology is moving is a big red flag today. That wasn't the case back then, but I'm trying to make this more relevant for your viewers today. So assuming you have an amazing product, then it's really subjective, man. I mean, frankly, people say it's based on the fit you have with the founder, or the founder market fit also. If you listen to that, you'll learn that VC is not the most diverse. They tend to be herds and focus on people that went to Ivy League universities, predominantly maybe white, and there's a lack of diversity because the people in control with the money fit that stereotype, and therefore invest in people who they resonate with, right? So I'd want to say you've got to use your instincts, but that's subject to bias and that could be interpreted very subjectively. But for me, it really is. I look for grit, I look for hustle, I look for founders who reference checks are very important, but people that are persistent. And also, the one thing that's really difficult to understand, great returns come from founders that are kind of weird. They're just kind of odd. Or someone on the founding team is kind of odd. Like, if you're going to go on this journey and you're going to try to build something very disruptive and achieve a big outcome, you can't be looking for consensus. You've got to look for someone that's a little bit weird. So if you, unfortunately, I hate this. I don't like this fact because I believe you should be nice. You should treat people well. But there are so many famous tech founders who are not very nice people, who are very odd, right? But they have created insane returns. And I talk to big VCs all the time, and those VCs lean into that. I've done due diligence, and VCs are like, we really like him. He's really odd, and that reminds us of a founder we passed on who was really odd like this. And there's just something about it. So it's just not what you think, Now, please don't go in and try to act odd if you don't have like the real thing behind you. Like be who you are.
If you're not an authentic odd person.
Yeah, if you're not authentically odd, then don't fake it.
Yeah. Next time you receive
no, but I like to think there are plenty of investors who look for like shared cultural values. For me, I've experienced some founders who have been unethical and have taken advantage of investors, and they were on the odd spectrum. So sometimes you get people that are like that. So that's why I said reference checking, and I think match your core values. If you're investing, life's too short. You want to enjoy the people you work with.
Yeah, absolutely. And do you look, when you're investing, do you look more into the founders to know if you think this is worth investing, or more on the product or their traction?
Nah, I used to look too much at product and traction. I mean, product is an example of, delivering proof, right? But the velocity of change is more important. Like how fast can they execute? And sometimes you're just betting on a market and you want a great team. And you're betting that this team will figure it out. This team will make the pivots when needed. This team will understand the signal and will, just execute well.
Yep. So you're more looking at, the defensibility side. Like, would these founders be able to get out of a sticky situation and survive through ups and downs?
Yes.
And stick it out through the journey?
Yeah. Because everyone might start at the same point in the race. Everyone's coming to you and they're investable. So you have to think like, okay, if you fall behind in the race, do you have what it takes to figure out how to find a shortcut, how to find a whole new move? And so you need to realize it's not about where they are in this race right now. Like when they come to us, maybe, Bluefield, we were investing in companies that had at least a few $100,000 in traction and were growing fast and had good co-investors alongside them, right? You got to think, okay, they're here where they are now. They meet the minimum hurdle for us to invest. But do I think these people can maneuver quickly enough when the race position changes? When they're falling behind? Or even if they're far ahead, can they keep maintaining that lead?
Yeah. Absolutely. Now, if we take a look into the future, do you believe personal brand marketing on platforms like LinkedIn and X will become a non-negotiable for B2B founders and C-suite executives?
I wouldn't say, do you think will become? I think it is non-negotiable already.
Yep. And you think those people who aren't are missing out on a huge opportunity and being left behind?
I mean, why would you ignore one of the biggest platforms in the world where you can have a chance to communicate authentically and potentially land a huge deal? So yeah, to me it's crazy that you wouldn't have that nailed. Like you can't be serious about your business if you're not really figuring out how to optimize this channel.
Yeah. And do you think brands and companies should be thinking about it in the same way they're thinking about as seriously about like a meta campaign and those other channels? They should be seeing it as a major pillar within their organization. Founders and senior executives, the company needs to be supporting them. To be able
to I think people are doing that and it's misplaced. So trying to view this as like a meta campaign is the example you used, right? I've encountered people who try to treat content like a paid ad, and it's a disaster. If you're looking at it as a paid ad, you don't have the patience, and you're going to try to immediately monetize your audience, and you might do really well at the beginning, but it's going to backfire on you because people will just start ignoring you because you're being too promotional. And content is not paid ads. It's a different part of the funnel. It's harder for attribution, which really sucks. Right? It's harder to prove the content drove revenue. We're trying to address that, but you've got to stick with it for time. And one thing about people, just as you can see, every new year there's a resolution to go to the gym and get fit or to pick up a new hobby. People are not good at staying consistent. And so they may start and they may drop it too soon. And this is something where it compounds if you keep doing it. You've got to look beyond 1 or 2 or 3 months. You've got to stick with it quarter after quarter over quarter, and eventually the growth starts to compound. You can't just go jump in on the platform and expect it to work forever immediately. Yeah, you may get that new person effect when you post on LinkedIn and you haven't in a while. The algorithm seems to promote you a bit more widely. And that's going to wear off eventually. What you want to do is figure out how to consistently dominate that platform in your vertical at the expense of your competitors. And that takes patience and time.
So it's more that medium to long-term game.
Yes.
This strategy and approach, yeah.
Content itself that's the whole purpose, I believe, of content marketing. You've got to plant the seeds.
Yeah, absolutely. Now, looking forward 12 to 18 months from now, what is the breakthrough feature or capability you believe will define Blazel, even if it's still on a drawing board at this point in time?
We're building things that I can't yet talk about publicly, but one thing that is happening right now is platforms like LinkedIn are becoming more and more referenced in SEO and AEO or GEO, Generative Engine Optimization. So that means LinkedIn content now is becoming more and more cited in things like ChatGPT and Claude and Perplexity. And if you aren't publishing content on there, you're missing out on that SEO traffic and AI search traffic, where AI is recommending you to people and using your content as a source. And that's a huge miss. So I find that interesting, and I think that trend is just going to continue over time. So I'd say that's probably the one big thing that is happening and will continue to happen over time.
Yeah, absolutely. And I guess when Blazel achieves its vision, how do you see a typical founder's day-to-day change, and what do you think they'll stop doing themselves and be able to do more of in their day-to-day?
A vision isn't just to take the burden off LinkedIn, where it's the weekend, you want to spend time with your kids, but damn, you have to write that post, and it's no longer fun. Instead, and that's not all we're trying to do. Ultimately, we want to create a platform that helps build your brand across multiple platforms, both offline and online. That doesn't exist today. There isn't a way for you to get your voice out there, to get on podcasts, to get published in the press, to publish content across multiple social media channels, to have your long form content, to have a newsletter, to have a blog, to get submitted for speaking engagements and to win awards. All the things you should be doing that currently agencies try to do. That's to me what the opportunity is. And we're starting to do many of these things for our customers right now. We're starting to expand beyond LinkedIn, but obviously LinkedIn is a major platform, and we still want to keep building defensibility in that area.
Yeah, fantastic. And is that where the vision is going? It's LinkedIn is your core pillar where you're starting the company and looking to expand to help founders and executives across all those other areas as well.
Yeah, I think LinkedIn will be the primary platform that we'll build around. I would like to, maybe my experience with Vungle, I would like to start to focus more on the attribution and sales effect of content. So rather than just being pure marketing, being able to prove someone you are trying to sell to looked at your profile, looked at the content you wrote, and that's valuable data that you could eventually tie to a sale. And that changes the equation. That changes your perception of how valuable the content is.
Yeah, absolutely. Now, final question, Zain, and I ask this to all my guests. If you could add one page to the GTM playbook, whether it's a tactic, a mindset, or a principle you swear by, what would it be and why?
So I can't give a quick answer. It's a bit of a longer answer, okay? But just do things that are so authentically you, and if you're crazy, lean into it. So we do crazy stuff. Every company I've been at, we do crazy stuff that just matches our DNA. At Vungle, when we were trying to get into the top 100 apps, I'd have my team play the games and end up in the top leaderboard of these companies. And there was one game I remember our team figured out how to like get the top score every time. And so literally the leaderboard would be like, the first measure would be like Vungle, second measure would be like wants to connect with you. And then as you go down the leaderboard, it's just us. And so customers would be like, man, you guys are obsessed with that game. And like, exactly, we care about your game. We believe we can help you. We believe we can put ads in your game and make it beautiful. So I feel like for GTM, you've got to do crazy things. Another thing we did at Vungle that was really cool was we found a woman who was on Etsy. And she was stitching together these pillows. And we basically hired her on an exclusive basis to produce custom-made pillows with the app logos of customers. And would send it to them as part of our outbound strategy. And customers would receive that pillow and it would be like, wow, this is so cool. Who made it for us? Oh, it's Vungle. They'd put it out on social media and they'd do stuff. So I try to do things that are authentically us and wacky also. It's just the way we are as a team. We're kind of crazy. And so we do a lot of things like that when it comes to GTM and marketing, like more unique one-off things.
So you're standing out from the crowd. I see, and I hear this often, where go-to-market in marketing is a little bit like investing on the stock market. Like when you hear your taxi driver telling you about to invest in something, you know it's too late, everyone else is doing it.
Yeah.
You're probably not going to make a lot of money from it. And I feel go-to-market and outreach approaches typically run similar. Like if it's at the point where everyone's doing it and you're just now copying what everyone else is doing, it's like you've missed the boat and you're now just going to blend in. Whereas when you're doing things differently, doing things that others might, when people go left, you go right.
Yes.
You can stand.
Yes. So there's two things. Doing things that are authentic to you, even if that means you're going to do kind of wacky stuff. I feel like when teams are told, hey, let's figure out how to promote this product and let's be creative, real magic happens when the team really leans into it and realizes there's no constraints. So we do a lot of that at Blazel. If you follow us on LinkedIn or you follow me on LinkedIn or my CMO, we do all these crazy publicity stunts all the time, and we get in trouble for it sometimes, but it's so fun doing it. The second thing I would say is not necessarily go left when everyone's going right, although that's part of it. Go where the industry is going. And you know where this industry is going? Because of AI agents, and because of even vibe coding, right? We are moving beyond a world now where it's about giving people static documents and giving them generic materials. We're moving to a world now where your outbound can become extremely personalized. In Blazel's case, we produce very deep, rich research reports for our customers that even a data scientist couldn't produce, but we've spent so much energy doing that. Where this is going is marketing and sales will become a lot more like you need to provide the demo as part of the sales process. You need to create an interactive website. The product is part of sales motion now. Rather than sales to lead you to the product, you put the product at the front of the sales funnel. So interactive demos, MVPs, custom-made products, research reports. This is the new era of marketing, and if you can figure out how to do that at scale, you're going to see insane conversion rates with your outbound.
Yeah, absolutely. And I know Canva did that really well, which was attributed to a lot of their success, where people can just go to their website, just jump straight into the application, no friction there, and just start designing, amazing glossy brochures.
Well, no, but that's just a slick onboarding experience in the product. I'm talking about building things that no company could build for you. But because you can scrape data, you can quickly use vibe coding to create full-on demos. You're trying to sell something to the enterprise, for example, right? You can now go to them with like huge research report, documentations and interactive demos and things that your competitors are just not able to compete with. Your competitors showing them a boring sales collateral that's out of date. You've come in with something that just blows their mind, that's so uniquely custom, to give them a taste of what you can do. To me, that's where GTM and marketing is going. Your ability to just go download Claude Code or Cursor or Lovable or Replit or whatever it is, and go figure out how to create something that's going to wow your end customer. It's so much easier than, honestly, it's faster than going into PowerPoint and changing that deck and then saving it as a PDF. Oops, I spelt it wrong. Go build a custom website for them. Go show them something that is going to get them so excited that they've never seen anything like this before.
Yeah, so true, so true. Well, Zain, thank you so much for jumping on the podcast today and sharing all of your amazing insights. I know you're a busy man at the moment, juggling building a startup and newborn baby, so I really appreciate your time today and for jumping on the podcast.
Thank you. Really happy to do this with you.
And for anyone who wants to learn more about Blazel or get in touch, what's the best way they could go about that?
Blazel.com, like BLAZEL.com. Zain Jaffer, Google me or go on LinkedIn and connect with me.
We'll be able to see all your content. Fantastic. Good stuff. Well, thanks again, Zain, and we'll see you all in the next episode.